First of all, welcome to mindyourinvestment.com. My name is Siddharth, and in today's video we talk about the quarterly statement analysis of a company. Now along with that, we'll also do a valuation of a company so that just after the analysis of the quarterly statement, you can find out whether the company is overvalued or undervalued. You can see what is the possible intrinsic value or target price of the company so that you can invest in it and you can exit the company if it is overvalued. So we look at a few different metrics, but let's get started. But you know the drill. If you haven't seen our part 1, 2 or 3 of fundamental analysis series yet, watch the videos over here and then watch this one, because this is going to cover a lot of the things that we covered in our earlier video. So let's get started without wasting any more time. It's a small video, but it is one of those videos which will again help you understand fundamental analysis of a company in a very immersive way. Let's get started. So what are the things that we'll cover in today's video? So the first one is what are quarterly results. Second one is how to read the quarterly results correctly, whether the quarterly statement is seasonal or is it on a regular basis. This is a tough thing that most of us do not know. So we'll find out how to read them correctly. Third, a quick valuation of a company with intrinsic value. So I'll show you two different types of calculating the same intrinsic value, one easy way and another one a bit more correct and immersive way. So you learn both things today. And finally, doubts and queries we had from series 1.0. Now before we start off with the quarterly statement analysis, there are a few things that you need to know. The first one is that this gives us the most recent outlook of a company. The profit and loss statement or the balance sheet of a company are all yearly figures, as in they are posted once every year. The quarterly results are given to us every quarter, as in every 3 months. So this picture or this event of a company where it shows its financials tells us the clear picture of a company in short term, and based on this the company's share price move. So this becomes one of the most important part of analysis of a company for short term. So now let's find out what does the quarterly statement mean and how do we analyze it. Now if you have seen the profit and loss statement video earlier, then the quarterly result is very similar to that. The only difference between profit and loss statement and quarterly statement is that that is posted once every year, this is posted once every quarter. Otherwise everything is very similar. Now in the screener.in website, if we go and search the company we want to analyze, let's say we want to analyze a company like Reliance Industries. So we click and search the company. Here you'll get all the information. We'll scroll down and then we'll come to the quarterly result section. Now here, just like the profit and loss statement, if you scroll down, it is the same. Sales, expenses, operating profit, net profit, all of these things are mentioned here. Similarly, in the quarterly result, it is just the exact same. Only difference, like I said, is that it is posted once every quarter. So over here, we can see the last 4 quarters, like September 2021, which is the latest result, June 2021, last quarter, and the quarter before that, March 2021. So based on the quarterly results, the profit and loss statement is calculated. Now our job to analyze a company for short term, as in should the company be invested in for short term periods like let's say 3 months or 6 months, you require to analyze the quarterly results, and that is what we're going to do in this video. Now over here, the criteria of looking at a company which is good and bad is the same as profit and loss. So if you haven't watched the profit and loss statement video, watch that. So let me give you a quick recap of what the profit and loss statement says. Now in the profit and loss statement, we saw that for a good company, the company's sales, net profit should be always increasing. In a bad company, the sales and profit will be falling. So that same parameter applies to the quarterly statement as well. Similarly, the company's interest burden should be falling in a good company, and in a bad company you might see that the company's debt is increasing and also the company's interest is also increasing. And finally, the EPS of the company should also be increasing in a good company, and in a bad company it will be falling. So this is the same picture that we use, or the same metrics that we use for analyzing the quarterly statement of any company. Now the most important thing is that a few companies in India you'll see are seasonal in nature, like let's say tire manufacturing companies, or let's say the companies like coffee. So when the production of coffees happen, that can only happen, let's say, in a 6 months period. That is where the company's sales is the highest. Voltas, a AC manufacturing company, you do not buy AC when it is winter season, so the sales of the company will be highest in the summer seasons. You have to know how to compare companies based on the seasonality factor or regular factor. Now let's look at a company like Reliance, which is throughout consistent, as in the number of users in Jio or the petrol production or whatever business line Jio is in, it is mostly constant throughout the years. So that is why the quarterly statement can be compared from one quarter to the last quarter. Now over here, if we see, the company's sales has grown consistently in the last 4 quarters. It was 117,000 crores in December 2020. From there, every year the company's sales has almost grown. In June 2021, it fell a bit, but again in 2021 September, the company's sales have increased. So this is a sign that the company is doing very well in terms of sales. Now if we talk about Voltas, and if we search Voltas, which is an AC manufacturing company, here you'll see a different picture. In March 2021, the company's sales were 2,652 crores. Similarly, the last quarter before that, December 2020, the company's sales were 1995 crores. But if we compare this with the last year and the year before that, then we'll see the seasonality factor. Here you'll see in 2020, the company's sales in March was 2,090 crores, and in December it was 1,400 crores. And in June 2020, the company's sales were much lower at 1,297 crores. Similarly, the year before that, if we again compare, here you will see March 2020, the company's sales were 2,063 crores. In June 2021, 2,065 crores, and December 1,472 crores. So this company, if you see throughout the periods, the company has lowest sales in the quarter of December and September. Why? Because this is the winter seasons. People generally do not buy AC in this period, and hence the company's sales will be lower. So how do we know whether the company is doing well or not? Should we invest in the company or not? So in such cases, we have to analyze the company year over year basis. So September 2021, the company's sales was 1,689 crores. So we compare this with last year September. So if we do that, it is 1,613 crores. So a very small jump in company sales we could see in September to September quarter or year over year basis. Again, if we compare that with the last year's data, so September 2020, if we compare with September 2019, here the sales were much higher in 2020. So this would mean that the company is doing well even in off seasons. Now, when we talk about the seasonality factor of a company while analyzing the quarterly statement, we have to compare the company's quarterly results with the last year's same quarter. So September 2021 will be compared with September 2020. If the sales is increasing year over year, then we say the company is doing well. Similarly, in a normal company, we can compare it from September to June. So when you want to invest in a seasonal company, if the company's sales are growing even in off periods, that would mean the company is very good. In the peak seasons, the company's sales generally always grow. But if the off-season periods, the company's sales is still growing, that would be an indication that the company is doing much more to increase their sales even during off-season periods. So Voltas, that we can see over here, is a very good company for investment. Why? Because we see a jump in sales even though it was off-season. Now the company's share price, if you see, it has always consistently grown up throughout the years. Why? Because like I said, the quarterly figures of this company is very strong. Had the September quarter's figure in 2021 been less than the September 2020's figure, then the company's share price would have fallen. That would indicate that the company, even in off seasons, isn't doing that well. So this is how you compare the quarterly statement of any company. Now, the best way to analyze the quarterly statement of the company is very simple. Now, the sales and profit should increase consistently both quarter over quarter and year over year for a company if it is a normal company. Like I said, if it's a seasonal company, then year over year period makes much more of a bigger impact. Second, don't take fresh entries in a stock if the profit and sales for a company quarter over quarter, like September to June, or year over year, like September to September, is falling. I'll show you examples right now after this, that if the sales or profit are falling in the company's share price will also fall. And thirdly, if the company is loss making, as in the company is posting negative profit, then do not invest in the company for short term, because later on in the next quarter you might not know whether the company will be profitable or not. If you want to be a safe investor, a good pro investor, then never invest in a loss making company unless the company does a makeover and it becomes profitable and the sales also grows. So these are the three important parameters that we look in the quarterly statement while analyzing it. Now let me give you a few examples of companies where the quarterly result didn't turn out very well and the company's share price also fell. Now here on the screen you'll see Britannia Industries. This is a very famous company in India. Now if you look at the company's share price, it fell from the September all-time highs of 4,124 to a level of 3,500 rupees. Let's find out why. Now if you scroll down here in the quarterly results, you'll see this is not a cyclic business, yet the company's sales hasn't grown that much in the last couple of quarters. It has only grown by a mere 5% or 10% at times. The company's profit also has fallen in the September quarter. So the moment the company's results are announced, the company's share price falls if the quarterly results are not that strong. Whenever the results become good, the company's share price also reacts that way, like we saw in Reliance Industries. Reliance Industries quarter in September was so good that the company's share price increased and it went up. So you might have a question, where do you find companies which are seasonal in nature, where the quarterly statement has to be analyzed year over year basis and that has to be given more importance? So this website over here, which you can see on the screen, this website we found from Google. This has all the cyclic companies mentioned here. So the companies like ABB, Bharat Electronics, Larsen Toubro, these companies have cyclic business, as in they do not have consistent quarterly figures every quarter. Some quarters the companies get more orders or more sales or more profit, and that is why these quarters have to give more importance. So you need to analyze companies from this list if you want to find whether these companies can be invested or not in the cyclic nature. For any other company apart from this list, you can just follow the quarter over quarter analysis or year over year analysis and see whether you can invest in them or not. So now let me show you a quick valuation of a company using the forward EPS model. Now I'll show you a very quick way of analyzing, and then I'll show you a bit more time consuming way, but that is more correct. But let's find out how do you do it. So now let me show you how to calculate the target price of a company very quickly. Now this method is called the forward EPS method. This is the easy method. I'll show you a bit more correct and accurate method just in the next slide. So the concept is very simple. All we have to do is go to Screener website and over here search the company. So we want to analyze ITC Limited, so we have that open here. Now the good thing about Screener is it allows you to add certain ratios. So if we click on this one, this box, edit ratio, which you can see over here, just click on that. Once you click on it, just search over here expected quarterly sales growth. If we click on this box and save quick ratio over here, we will get what is the expected growth rate of the company going forward in the next quarter. Now this is 16%. So maybe based on historical calculations, Screener.in has given us this number. If we assume this to be the growth rate, our calculation becomes very easy. Next step is just to scroll down over here in the quarterly results section, and here we'll only look at this box, which is EPS in rupees. So this EPS box which you see, this is where we have to focus. Now we do not know if the company is seasonal or if it is a normal company. It can be for any company that we analyze. So to take out the possibility of not considering a seasonal company or a normal company, we will consider both quarter over quarter figures and year over year figures. So all we have to do is open the calculator, and in the calculator we will add the current quarter's number, which is September 2021, and it is 3.01. So we will just add 3.01 over here. Along with that, last quarter's number, which is 2.66. So we'll add 2.66 over here. Once we get this number, we will add the year over year's number. So that is September 2020. So September 2020's EPS was 2.74. So we'll add this over here as well, 2.74. If we combine all the numbers together, it is 8.41. And now that we have considered three figures, we'll divide it by 3. So 2.80 that we see over here, 2.80, this is the average EPS of the company. This EPS has to be taken in the forward or in the future. How do we do that? We multiply this by a growth rate of the company. And it is very simple. We just multiply this by 1.16. 16%, if we multiply to it, it becomes 3.24. Now, why did we take 16%? Because it is the expected growth rate of the company for the next quarter. Now, this is the quarterly forward EPS number. Now, we have to convert this into a yearly figure. And it is very simple. Since there are 4 quarters in a year, we multiply this amount by 4. The moment we do that, we get 12.99. So this is the final forward EPS number of the company yearly basis. Once we have this, we have to multiply this by the PE ratio. Why do we use the PE ratio? We covered in the last video, the ratios video, where we saw that the PE ratio's formula is current share price divided by EPS. Now, if we assume a growth rate of EPS and multiply it by the average PE of a company, we get the target price or intrinsic value of the company. So the procedure is very simple. We'll scroll down and see the PE ratio of a company. And once we go to the PE ratio of the company and click on 6 months, in the last 6 months, we get the average PE of the company. It is 19.02. Now we'll just multiply this amount, 12.99, by 19.2. This gives us a target price of ITC at 249.4. So this is a very simple way of calculating the company's target price or intrinsic value. The company's share price right now is around 224 rupees and the target price is 249. So the company is a bit undervalued based on the growth rate that the market is assuming for this company. So if the company makes 16% growth rate, then the company's share price will go to this level till the next quarter automatically. So now I'll show you the correct way or a more efficient way of calculating the target price using the forward EPS method. Now here we are assuming the growth rate of the company based on historical factors. Now to do that, what we have to do is go to the sales section. I have taken and done the calculation on the screen over here so that it is much more easier for you to understand. Here in September 2021, the company's quarterly sales figure was 13,757. We minus this amount from the last quarter, so 13,247. If we minus these two, then the amount is 510. Similarly, we'll minus the September 2021 with the September 2020 year over year, which gives us 1680. Now we have to do an average of these two figures. So 510 plus 1680 divided by 2, which is 1095. Now if we do a percentage of that, as in divide by 100, we get 10.95% or 11%. So the 11% that we get is what the company has grown in the last couple of quarters, year over year and quarterly wise. So we assume that the company's growth rate will be at this rate till the next quarter. Similarly, with EPS, we'll do the same thing. Over here, we can see that we have taken the average of the current quarter and the last quarter. So we take 3.01 and 2.66. We do division of that by 2, we get 2.83. And similarly, we'll do a division of the current quarter to the last year's quarter, 2.74. So if we do a division, then we get 2.87. Once we get the quarter over quarter and year over year's number, we do another average of that, which gives us 2.85. In the last example, we got 2.80. Here we're getting 2.85. So you see there's a difference. Now we have to multiply this amount by the growth rate. Now the growth rate of the company is 11% that we calculated using the sales figure over here. So once we do that, we multiply it by 1.11, which is the easy calculation, we get 3.16. So this is the estimated EPS of the company for the next quarter. Now you know the drill, we have to multiply this amount by 4. The moment we do that, we are converting it to yearly, which is 12.64. Now the final step is that we have to multiply this by the average PE number, which is 19.2. Once we do that, we get the intrinsic value of the company at 242.6. So this amount that you see is a bit more accurate than what we got in the last example. Why? Because we are doing everything manually. We are assuming the growth rate of the company on what has happened historically, and we are also assuming the EPS both quarterly and yearly in a much more efficient way. This is giving us the intrinsic value or the final target price at 242. So the company is expected to reach this target price till the next quarterly results are announced, which is December 2021. The good thing over here is that if you use a fundamental analysis Excel sheet, then you'll get a lot of things calculated to you automatically. Like this is the analysis of ITC. Once you enter the data from screener.in over here, you'll get the score of the balance sheet, the profit and loss statement, PEG ratio, along with different valuation models like forward PE, EV, and forward EPS target, which is what we covered right now. Now all you have to do here is just enter the growth rate of a company manually, although what we can see here is the calculated growth rate of the company at 1%, but in the example that we did, it was 11%. So once we enter 11 over here, we get the target price of the company at 246.8. Now this is one way of finding out whether the stock is suitable for investment or not. It gives you a score of 78% based on certain custom situations which you have to fill over here. So this is a very nice Excel sheet. You'll get to see the reports of the company, the balance sheet of the company, the profit and loss statement. A lot of different models are here altogether. However, if you are a pro trader who does a lot of investing every 3 to 6 months in a stock, then you have to use our stock valuation package. This gives you the target price of a company with 8 valuation models, like the modified Graham number, price to sales model, EPS number. So there are 8 valuation models which gives you the actual target price of the company. These models are used by the top brokerage company all over the world. So now let's answer the doubts and queries we had from series 1.0. The first one is loss-making companies are making higher highs. Why? Now a lot of you have this question, and it is a very important question. A prime example of this would be Tata Motors. Tata Motors is a loss-making company. The losses are more or less equal throughout the quarters, yet the company is going up. The biggest reason for that is the company's future prospects. Now some companies might have something going forward for it in the future, like Tata Motors EV setup, which is expected to do very well in the future. Based on that, the company's share price is trading at a much higher premium than the price it should have been trading at. Now there is a way to calculate the valuation of a loss-making company, which is the question 2. We'll do that with the price to sales model. We'll cover that in one of our videos coming forward. Third is, what if sales are growing but net profit is not growing? What do you do with such companies? Well, in such companies, you'll see there could be a reason that the expenses are going up or the company's interest burden is going up, which is one of the reasons why the company's net profit isn't increasing. Although news and events and other factors like the possibility of a good future can drive the company's share price. We'll cover all of them in the series going forward. So don't forget to subscribe this channel and hit the bell notification. You'll get the latest notification about our lessons. And finally, don't forget to check out our seminars on fundamental analysis, technical analysis, and future options. Here we have a course where you can learn directly from me in a video conference in a trading platform where we do an interaction. It is a 3 to 4 days learning course where we teach you how to do individual topics correctly. You will learn a lot if you are starting off. If you learn something from this video, you learn 10 times more than that in these seminars. So if you're new to our channel, definitely give these a try as well. These will give you the highest possible return. So that is all that we have for today's video. If you have any doubts regarding the topic that we spoke of, don't forget to WhatsApp us on this number. Along with that, don't forget to check out our premium Excel sheets available on the website with the webinars.